Hi everyone and welcome back to the webinar program. Today we bring you money options for young people. This event is brought to you by Services Australia. My name is Cameron and I will be presenting part 2. Part 1 can be found on the Services Australia website and on the Services Australia YouTube channel. So before we start, Services Australia would like to acknowledge the traditional custodians of the lands we live on. We pay our respects to all elders past and present of all Aboriginal and Torres Strait Islander people. But just before we start, a little bit of housekeeping. For those of you attending the webinar live, we do have a question and answer section over to the right-hand side of your screen. Please help us to protect your privacy by using your first name only, or you can send your question anonymously. We have moderators ready to answer your questions, so feel free to ask away. For those of you watching this webinar on YouTube after the event, you can find all the links in the webinar summary section. So today's topics will include looking at renting a home, buying a home, understanding insurance, and some support that Services Australia might be able to provide you with. We hope you go away with knowledge and resources that can help you make better financial decisions now and into the future. So today's information is being presented by the Financial Information Service, commonly known as FIS. We provide independent information and education to help you understand your financial options. It is a free and confidential service available to all members of the public. The service provides information only and no advice. We can support you with information about banking, investments, tax, superannuation, accessing credit, changing jobs, changes to family circumstances, retirement, or you might be someone who is caring for someone who's transitioning into aged care. There is always a disclaimer. Now, that information in this webinar is a guide only. It is current at a particular date and is subject to change. Check out our Services Australia website for further information. So let's get started. Let's look at renting a home. So choosing a place to rent can be quite overwhelming. You need to have pretty good idea of what sort of property you need. Will this be a house, a villa, or even a unit? Make a checklist of what you need from a rental property, such as how many bedrooms or car spaces that you need. Distance to your family and work can also be important, as this can help save on transport costs. So if you are looking to rent, you need to consider how much you can afford. So there will be some upfront costs. This include a bond deposit, potentially, that is usually about 4 weeks. And generally you are required to pay up to 2 weeks in advance. So potentially you could have to pay up to 6 weeks rent upfront. So for those of you who are looking at buying a home, buying a home is the great Australian dream. However, now with the cost of living, it is getting harder to achieve. If you are considering buying your first home, do some research and investigate how much you can borrow and how much money you need to save for the deposit. Make sure you're aware of any first home buyers grants in your state. These can possibly be included towards your deposit. There are some great advantages of owning your own home, and one of those is that you have an asset that should increase in value over time. So the more you pay off the mortgage, the more you own. Having your own home also means that you can have a say in things. You can update or change things without having to get approval. It's yours, you own it. You could change the colour scheme, hang up photos without needing permission. Owning your own home, though, does come with some cost. The first one is the deposit. Then there are ongoing costs, repairs and maintenance of the home. There could also be rates or strata fees, as well as home and contents insurance. You also have mortgage repayments, and we know that interest rates can change, so these costs could potentially be higher than currently renting. So if you are going to buy a house, you obviously need a home loan. So a home loan is a secure loan to help you purchase a property. This loan is usually secured against the property. It allows you to pay for the property over time. There will be terms and conditions in a home loan and can include, but are not limited to, the period of the loan repayments, any associated fees with the loan, as well as any penalty fees and other special conditions. How much you can afford to repay will depend on several things. This will include your budget. So how much can you borrow? Your savings, and importantly, what is your capacity to repay the loan? which takes us on to choosing a home loan. Home loans can be fixed or variable. A fixed rate is an interest rate that is fixed for a period. The fixed rate means that the same interest is charged during that period of time. This allows you to know how much you need to repay with each mortgage repayment, and fixed interest can be higher than the variable rate. So variable interest rate is where the interest can change over the loan period. This can have an impact on what the interest rate may be. This means potentially each month this could change, and you will need to take this into consideration with your budget. Now, speaking of the budget, let's look at repaying the mortgage. So home loans can be for up to 30 years. The amount of interest you pay depends on the balance of your loan. By making extra repayments, even by changing your payments to fortnightly, you can reduce your loan and reduce the amount of interest you have to pay. The more you reduce your loan means that you are increasing equity in your home. This means you are increasing the value of your assets. Now, Chris and Sam chose to pay their mortgage off fortnightly rather than monthly. So Chris and Sam have saved a $70,000 home deposit. Using a mortgage calculator to work out the monthly repayments, they decide they can afford to borrow $380,000 over 25 years. So by paying their loan fortnightly means their balance is lower for half the month, and if they effectively pay one extra monthly payment each year, because 26 fortnights can be like 13 months. So based on an interest rate of 5.6%, they would pay off their loan 3 years and 9 months earlier and could save over $57,000 in interest. Now, obviously, if you're looking at moving out or buying a home, insurance is also very, very important. But insurance can be a bit tricky, so let's go over some basics. Insurance is a risk minimisation strategy. If you lose or damage something, can you afford to replace it? Like if your car was involved in an accident, would you have enough savings to be able to buy another car if needed? This is where insurance comes in. It is where you pay a fee to insure an item, like your car. Then if that item is lost or damaged, the insurance company will either replace the item or provide a money payout. Now, some insurances are compulsory, like third-party insurance that is required when you register your car. Other insurances are voluntary. Insurance is a contract. This is represented by a policy, where an individual or entity gets financial protection or reimbursement against losses. If we look at car insurance, you can cover yourself and others from any losses. But just be aware, though, that most insurances have an amount that you will need to pay towards some replacement costs. This is called an excess payment. This can be quite high for younger people, especially with car insurances. So maybe think twice before letting your friend drive your car. Other insurances that you might think about are travel insurance, especially if you're traveling overseas. Do read the product disclosure statement, as many will not cover your costs at the time of the event, but might not reimburse you until you get home or after you have paid for your treatment or changes to your travel itinerary. Now, many young people have private insurance that is linked to a parent or a guardian. Best to ask how much longer that coverage will last before investigating potentially your own coverage. Now, insurance can be expensive, there's no doubt about that, but there are a few ways to save on insurance. The first one is to make sure that you check your insurance every time it comes up for renewal. Don't fall into the trap of just renewing the same insurance each year. Check that you're getting the best deal and the best level of cover. Get multiple quotes. Most insurance quotes can be done within minutes online. If you do this, you may find you can save hundreds on the same level of cover with a different company. Today, we're also looking at personal insurance products because what is your most important asset? It's definitely yourself. So the biggest thing to take on insurance is to read the product disclosure statement, also known as a PDS. And if you're not sure, ask for the insurance company to explain. Now, personal insurance is something that is often overlooked. However, you need to think about what would happen if you got seriously ill or injured. How would you pay for your costs, like rent or being able to put fuel in the car? For some people, personal insurance is covered in their superannuation policy. However, if you're under 25 or your super account balance is under 6,000, insurance isn't provided. So you need to contact your super fund and to request insurance through your super. So there are some other personal insurance products too. And there's several different types of insurance policies for personal insurance. So if you look at, say, life insurance, this is a lump sum that is paid out when you die and helps towards costs, things like funeral, or you may have bills that need to be paid. There's also total permanent disablement. This helps you if you're permanently unable to work. There's also income protection insurance, and this helps you pay your income if you're temporarily unable to work due to an illness. There's also trauma insurance. This is a lump sum that can be paid if you suffer a traumatic event like a heart attack or a stroke. Like all insurances, there are lots of rules and options. These are covered in the PDS. If you need help, you can ask to talk to your super fund, and there's also some information on the Money Smart website. So when looking at personal insurance, some of the factors we need to consider. Do you have mortgage and other debts that need to be paid if you're not working? Is that offset at all by your super? Does your super cover that? You might need some income replaced because you can't work for a while. How much do you have in savings? How much do you have in investments? You may have a partner or you may have children. And, is your partner's income going to be able to use to help you through these circumstances? You can always go onto Money Smart website and have a look around and head to the tools and calculators and create yourself a budget. By using a budget and having a budget planned, those questions that I've just asked above can easily be answered. Now, getting on to the Australian government. So Services Australia can assist people with looking for work, people planning to study, people with disabilities, older Australians, child support, Medicare, raising children and carers. So there are a variety of payment options available depending on your personal circumstances. We're just going to discuss one of the more main ones in detail moving forward. So if you're a student or an Australian apprentice or a young person looking for work, you may be eligible for youth allowance. Now, youth allowance is financial help if you're 24 or younger and a student or an Australian apprentice or 21 or younger and looking for work. There are quite a few categories within this one. So if you're 16 to 21 and looking for full-time work, we may be able to assist you. If you're 18 to 24 and studying full-time, also there could be a payment for you. If you're 16 to 24 and doing a full-time Australian apprenticeship, or if you're 16 to 17 and independent or needing to live away from home to study, or if you're 16 to 17 and studying full-time and have completed Year 12 or equivalent. There's also a payment for people who are over 25 and are studying or an Australian apprenticeship. This is called AusStudy. So you need to be over 25 to receive this payment, and you either need to be a full-time student in an approved course or doing an Australian apprenticeships. But there are some income test limits for this. Now, there is also another payment called AbStudy, and this is financial help for Australian Aboriginal or Torres Strait Islander students or apprentices. Depending on a student's circumstances, AbStudy can help with your school fees, buying school materials, boarding fees, and living costs and travel costs. Now, as you can see, there's quite a few different payment rates there that you might be eligible for. So if you think you might meet one of the above categories and the categories we spoke to previously, please check out the payment finder on the Services Australia website, and that will give you an indication of whether you might be eligible for some assistance. Also, with Services Australia, we do have concession cards and healthcare cards. So concession cards can be linked to your payment or your current circumstances. So you can check your eligibility once again via the payment finder on the Services Australia website. Also through Services Australia, we have many what we call self-service options. So you can manage most of your Medicare, Centrelink and child support information with us online, or by phone self-service. So we have the MyGov, we do have some apps, and also we have a phone self-service which you can call the 136 230 number to register. Just remember, first in line every time. MyGov is the way of accessing your Australian government services online, and it's simple and it is secure. MyGov allows you to link a few different government services in one place. This allows you to take control of services that you would like to have linked to your MyGov. There are multiple phone numbers as well that you can talk. So many services exist to assist you. So you can look at there as the financial information, job seeker, youth and students, and you can even contact a social worker over our phone if you require that assistance. You may also want to look at whether someone can help you with some of your Centrelink workings. So you can ask someone to act as your authorised Centrelink or aged care representative. So for some people, you may only want a little bit of help to deal with this. But for other people, you can authorise a person or an organisation to do this on your behalf. They can ask questions, make updates, act on your behalf, and under some circumstances may even get your payments paid to them. Once again, today's information has been brought to you by the Financial Information Service. If you'd like to speak to someone like myself, you can talk to us by calling the 132 300 number or the number you use to call Centrelink. And if you say Financial Information Service, when asked while you're calling, you'll be transferred to someone on our FIS phone service. We also have video chats, so we can talk to you online. We do have some face-to-face appointments available. We do community outreach. You may well see us out and about somewhere. And there are webinars. So there's a list of other webinars like this one that you can look at. And sometimes you might even see us at your college or something, giving a presentation on things. So thank you very much for attending today. I hope you got some information out of this. So thank you very much and goodbye.